Hi, I'm Mark Mercurio with Wealthcare Investments and Insurance. This is Scott Walker, and we've got some important economic news for you today. But Scott, we got some good news as America's starting to go back to work again after the coronavirus pandemic a couple of weeks ago started. But we've also got some bad news that came out the other day.
Yes, on April 29th, the GDP was reported for the first quarter of 2020, and it was a negative 4.8%.
So why should our viewers and people care about the GDP? Kind of define that a little bit.
Okay, well, the GDP stands for Gross Domestic Product, and it's the sum of all products and services that are produced inside the United States. And it's a way that we measure economic growth. So when you have a negative GDP, that indicates that our economy is shrinking.
So when's the last time that we've had a negative GDP of this magnitude?
That would have been in the fourth quarter of 2008, right after the market crash, and as we were going into a fairly severe recession.
So we know the definition of a recession is two consecutive fiscal quarters in a row with negative or down numbers of GDP, correct?
Correct. So we're not technically in a recession at this time.
Not yet.
Right. But the next few weeks is going to be very critical as we see how quickly America can get back up and running and how much of America can get going. We're already in the middle month of the second quarter, so it's very crucial.
So what's some good news out of all this?
Well, as President Trump said, this is a health-driven crisis, not an economically driven crisis. And even though we were starting to see the economy slow a little bit over time, we were still very strong going into this. So the fourth quarter of 2019 had a positive 2.1% GDP, and we were forecasted to have a positive 1.4% in this first quarter. So the economy is very strong, and that's why President Trump said it's very important that we get America up and running again, because as long as we can do that sooner than later, the economy can rebound very quickly. I do see, though, that what we do need to do is we need to look at how fast can we do it and how much can we get opened here in the next few weeks, because that's going to have a huge effect on the second quarter.
So some of the things that you can do right now with your investment accounts is start planning. Make sure that you have a plan in place so when numbers like this come out, you don't have to react to them. You've already acted in your best interest. And we can help you start a plan like that if you've not already started like that. But this is one of the things that we talk about with our clients all the time. They've got to have a plan. They've got to have a vision. You got to have a purpose for what you do so that you don't make a knee-jerk reaction to the market conditions, correct?
Correct. So, right now over the next few weeks, we've been telling a lot of people kind of stay calm, wait and see what happens. But that doesn't mean that you can't start planning.
That's right. So give us a call today. We'd love to help you or give you a second opinion of where you're at, and then start planning for you tomorrow and make sure that you're not reacting to a situation like what's happening right now.
Right.
Thanks for watching.
Thank you.